Welcome to the Crypto Daily News. This podcast is created by Generative AI. Today is August 1st, 2024, and we've got a lot to cover in the world of cryptocurrency, blockchain, and Web3. Links to all stories can be found in the episode notes. First up, the Terra blockchain experienced a significant exploit on July 31st, 2024, resulting in the theft of over $4 million in tokens. The attack involved the draining of approximately 60 million Astro tokens, alongside 2.7 BTC, $3.5 million in USDC, and $500,000 in USDT stablecoins. Following the exploit, the price of Astro plummeted to an all-time low of 0.314, reflecting a more than 53% drop in value. In response to the incident, Terra halted its blockchain at block height 111430400 to implement an emergency patch, which was successfully applied by validators holding over 67% of the voting power. The network resumed operations around 4:19 a.m. UTC after the patch was deployed. The exploit was attributed to a known vulnerability related to a malicious COSM-WASM contract, which exploited a re-entrancy vulnerability in the Inter-Blockchain Communication (IBC) protocol. This incident marks a troubling event for Terra, which is a hard fork of the original blockchain that collapsed in 2022 due to the failure of its algorithmic stablecoin, UST. Following the exploit, Terra's Luna token also saw a decline, settling at around 0.3944. The incident highlights ongoing security challenges within the blockchain ecosystem, particularly concerning vulnerabilities in cross-chain protocols. Moving on to Bitcoin, it's currently facing potential challenges as its price hovers around $63,000, particularly with the upcoming repayment of 140,000 BTC, approximately $9 billion, to creditors from the Mt. Gox exchange. This significant influx of Bitcoin could lead to a sell-off, reminiscent of the recent $2.19 billion sell-off by Gemini creditors following a major announcement. Analysts from JP Morgan have expressed concerns that this situation may negatively impact Bitcoin's price in July. In addition to the Mt. Gox situation, Bitcoin's volatility has decreased, now lower than that of major tech stocks like Tesla, Meta, and Nvidia, indicating a maturation of the asset class. Bitcoin's one-year realized volatility stands at 44.88%, a stark contrast to the over 50% volatility seen in these tech stocks. Historically, Bitcoin experienced volatility exceeding 200% during its early years, which is typical for new and rapidly growing assets. The article also touches on the concept of liquid staking, which allows users to stake their crypto while maintaining liquidity, thus avoiding the lockup issues associated with traditional staking methods. Furthermore, it briefly explains anti-dumping policies in crypto, designed to protect investors from market manipulation schemes. Lastly, it outlines the fundamental principles of Bitcoin pricing, emphasizing the role of supply and demand, the 21 million coin cap, and the impact of Bitcoin halving events on its market value. Next, let's discuss the potential for a resurgence in decentralized finance, DeFi, particularly focusing on the cryptocurrency EV. Taiki Maeda argues that despite EV's underperformance against ETH over the past 4 years, there are strong catalysts that could lead to a turnaround. He draws parallels to the recent success of MKR, which saw significant gains after implementing a buyback proposal. Maeda highlights a similar proposal for EVA, suggesting that a buy and distribute model could be introduced using excess protocol profits, potentially by the end of the year. He acknowledges the risks involved, particularly the need for certain milestones to be met, such as the GHO supply reaching 175 million and the market's ability to absorb large sell-offs. However, he believes that the growth of GHO is crucial for AV's future profitability and that the DAO is taking steps to improve its financial health. Maeda emphasizes that AV remains a leading player in the DeFi space, with a strong brand and proven product-market fit. He expresses confidence in AV's potential to outperform ETH in the coming months, and shares his personal investment in AV, indicating a long-term bullish outlook. Maeda concludes by encouraging others to believe in the technology and fundamentals of DeFi, suggesting that a shift in sentiment could be on the horizon. Now, let's turn our attention to operational security, OPSEC, for cryptocurrency users. A thread by Pendle Intern provides an extensive guide on protecting digital assets from scams and fraud. Key recommendations include never reusing passwords and using a password manager to maintain complex, unique passwords for different accounts. Users are advised against saving passwords or private keys online, suggesting that they should be written down and stored securely. Anonymizing email addresses and using multiple emails can help contain risks, while enabling two-factor authentication, 2FA, adds an extra layer of security. The guide also recommends using hardware security keys for 2FA and avoiding SMS authentication due to the risk of SIM swap attacks. For storing cryptocurrencies, it suggests using hardware wallets instead of hot wallets for better security. Users should be cautious with transaction approvals, avoiding unlimited spend limits, and double-checking all details before confirming transactions. Regularly revoking approvals and minimizing browser extensions can further enhance security. Additionally, the thread warns against fake accounts and phishing attempts, urging users to verify URLs and sources before engaging. Overall, the guide serves as a comprehensive starting point for anyone looking to secure their cryptocurrency investments. In other news, the growing significance of Solana in the realms of stablecoins and real-world assets, RWAs, is becoming more apparent. Stablecoins, particularly Circle's USDC, dominate Solana's ecosystem, accounting for approximately 70% of the total stablecoin supply on the chain. The article notes that USDC's volume on Solana is significantly higher than that of USDT, driven by strategic developer incentives and integrations. Additionally, PayPal's PYUSD has gained traction, contributing to the stablecoin landscape on Solana. In terms of RWAs, Solana is gradually establishing itself with projects like Ondo Finance's USDY, which has seen integration into decentralized exchanges, enhancing its utility. Other notable projects include Maple, which offers lending solutions, and Parkle, a decentralized exchange for real estate investments. The article also highlights upcoming initiatives such as the Libra Fund, which will introduce tokenized funds, and Jupiter's Gum Alliance, aimed at creating a unified market for various assets. Overall, Solana's advancements in stablecoins and RWAs position it as a key player in the evolving landscape of decentralized finance, with the potential to attract institutional capital and further integrate traditional assets into blockchain ecosystems. The article concludes that as Solana continues to innovate, it may solidify its status as a leading chain in the current financial cycle. Lastly, a new research paper from Uniswap Labs, Circle Internet Financial, and Copenhagen Business School explores the factors influencing crypto asset prices, revealing that traditional financial elements, such as US monetary policy, significantly affect these digital assets. The study highlights that the crypto market, which has reached a market cap of over $0.48 trillion, behaves similarly to traditional asset classes, making it more predictable than previously thought. The researchers analyzed price movements since early 2019, attributing over two-thirds of Bitcoin's sharp decline in 2022 to contractionary monetary policy. They also examined specific events, including the FTX bankruptcy, Bitcoin ETF announcements, and the financial turmoil caused by COVID-19. The findings suggest that the dynamics of crypto prices are more logical than the market has historically perceived. This research aims to enhance understanding of market dynamics and the drivers behind crypto price movements. The full paper is available for those interested in a deeper dive into the findings. That's all for today's episode of the Crypto Daily News. Remember, links to all stories can be found in the episode notes. Stay tuned for more updates and insights into the world of cryptocurrency, blockchain, and Web3. Until next time, stay informed and stay secure.